Hello, I'm Shaun Richards of Not a Yes Man's Economics, and I'm going to talk to you today about Tesla, which is quite an example of the modern era. If we look at the situation, there's been an extraordinary surge in the share price recently. What's going on? Well, it's an interesting scenario. If we put it into song terms, it's a case of the haters are going to hate, hate, hate. Why is this? Well, Tesla's been in a situation whereby there have been a lot of doubts about the cash flow situation. There've also been doubts about profits. So as you can see, there's a sort of bad blood, if you like, whereby people looking at it on a fundamental basis, and this is only 6 or 8 months ago, there were concerns that the company might go bust. However, there have always been people that are like true believers who say that it's going to charge forwards based on what's behind that. And to some extent production, although in truth, even though it produces around 375,000 cars a year at the minute, that's not enormous on the scale of things. But the idea of electric vehicles going forwards, there being an enormous boom, enormous potential market. That's the basis behind that. So we've seen a sort of situation where, one group are talking to their friends, another group are talking to theirs, and there's two splits. What has happened from that phase, and the share price went down to 177 in dollar terms, is that there's been a squeeze. How has this happened? Well, if we look at the cash flow situation, you see yet again, you can look at that two ways. It's improved. Part of that is a pretty archaic system whereby the fact that Elon Musk is taking his money through share options, that counts as an improvement. But also, a function of the QE era, low interest rates, plenty of cash about, Tesla was able to borrow $2.3 billion last year. So as you can see, it got through that situation. Lots of people had shorted the shares on a fundamental basis. But then as the share price started to rise, they then had a problem getting the shares back. What happened here? Speaking earlier about environmental concerns, so environmental funds bought in. But lots of the ordinary shareholders in Tesla are true believers. You've got to have faith. They've stuck in. So they haven't really had anyone to buy back from. That's why we've seen the sort of surges that we have. And there's been a repeating cycle here. They try and buy it back. The price goes higher. Perhaps there's been a margin call or two on some. They then try and buy it higher, and so on. A bit like stop-loss situation that you sometimes see, particularly in currency markets. So as you see, there's quite a situation here, and we have a pattern, if we look at the chart that we have, that I call bowl theory. It starts quite simply, just simply the pattern is like drawing a bowl or an arc. And the thing is, though, should it break down below that, then you tend to see quite a sharp fall. The catch is, of course, at times like this, and we've seen it at the dot-com boom or Bitcoin, exactly when you see that. And will you be awake and alert at the time that it happens? But the prediction then is there'd then be quite a fall. So for those long, quite a bit of trouble. Trouble. So there's a few things to think about on this situation here as to what will happen next with Tesla. Because if you've piled in at, say, $800, whilst at the time of recording this, you've got a profit, but you've got quite an inflated asset if you look across at any sort of normal metric to see where you stand. And that's the problem. So you can see a situation in something like this whereby you might not want to be long, but you might not want to be short either. And this is a fundamental problem of the era. We've seen this in various different companies. If we switch to another situation and look at, say, capital investment, then that's been reduced. But on the other side of it, it's bringing a lot of new products in. So as you can see, there are quite a lot of questions here, and it is a function of the times. Thank you.